As we approach the end of the third quarter, there are a couple of market dynamics that we're finding particularly interesting here at Royal London Global Equities. The first has been the ongoing underperformance of emerging market stocks versus their developed market peers. In fact, emerging markets are down 15% relative to developed markets so far this year. And the second has been the ongoing outperformance of growth stocks globally versus value stocks. Reflecting on the emerging markets dynamics first, there are many reasons why emerging markets have been so weak. Rising interest rates in the USA, a strong US dollar, and the risk of increased trade wars have all been drivers behind weak performance in emerging market stocks. We don't have a particular view as to when these dynamics may end, but what we have noticed is that for the first time in many years, the relative valuation of emerging market stocks is beginning to get interesting again versus developed market peers. Turning to the performance of growth stocks versus value stocks, we're beginning to notice that valuation multiples for many growth stocks are effectively at all-time highs. In contrast, there are many value stocks that are trading at valuation multiples that are similar to that seen or those seen in the financial crisis. This differential in valuation between the two cohorts of stocks is at record levels when we look at the 30 years of data we have with which to study this. In summary, emerging market stocks are trading at attractive valuations versus developed markets for the first time in several years when we look at this through our framework. And in addition, the valuation differential between value stocks and growth stocks across the world appears to be at record high relative to the data of the last 30 years that we've been studying. At RLAM Global Equities, in our investment process, we remain focused on identifying wealth-creating companies with attractive valuations. It's this focus on attractive valuations and these two market dynamics that mean of late we've been finding an increasing proportion of interesting ideas in both the emerging market and value parts of the overall stock market.